Welcome to the presentation today. Today we'll be discussing GASB 87 related to leases. Regardless of where you may be in the implementation process for this new standard, we hope that this presentation will be able to assist you in preparing for your year-end closing process as well as your upcoming audits. Just want to start off by giving a quick introduction here. My name is Dan Krol. I'm an audit partner at Bowers & Company CPAs. Also with me to assist in the presentation is Andrew Swords, who is an experienced senior at Bowers. Bowers & Company CPAs, we're a local CPA firm with offices in Watertown and Syracuse, offering our clients a wide range of financial services, anything from accounting, auditing, taxation, business valuation, financial planning services, and consulting. It's our pleasure to be here today to present this new lease standard, as well as preparing the governments for their year-end audits. So as always, remember, our team at Bowers is available to answer any questions. If you have any questions, when we get to the end of this slides here, you'll have our contact information available. Just a brief outline of what we'll cover today. We'll start off by going over an overview of GASB 87. We'll look at preparing for the implementation of the new standard. What do we need to do to prepare for this implementation? We've been talking about this standard for a couple of years now, and we're getting close to the June 30 year end for some of these governments. And so what do we need to do to prepare? We'll talk about what is a lease. At this point, should have lease inventory available, and we'll look at the different things that are contained in a lease. Then we'll look at lease accounting, financial statement impacts. How is this going to impact our governmental funds, our government-wide financial statements? We'll look at example journal entries. And then last but not least, we'll look at GASB 96. As we're implementing GASB 87, there's also a new standard coming up, GASB 96, which is effective for next year, which we'll cover in a few slides as we get towards the end of the presentation.
Okay, so here we have a quick overview of GASB 87, as I'm sure we're all relatively familiar with now. This is the new lease accounting standard effective for periods beginning after June 15th, 2021 for governmental entities. School districts and BOCES are required to implement for the year ended June 30th, 2022. And so what this does is requires all agreements that meet the definition of a lease to be recognized in the financial statements and classified as a finance lease under a single model. Later in our presentation, we will be speaking about what does qualify as a lease under the standard. So the lessee is required to recognize a lease liability and an intangible right to use lease asset. And the lessor is required to recognize a lease receivable and a deferred inflow of resources, and that continue to capitalize and depreciate the cost of that capital asset.
So now, preparing for the implementation of this new standard, what do we need to do at this point? Develop a lease inventory. Both the lessee and the lessors are going to have to develop a lease inventory. You'll have to come up with a description of the item. You'll need terms of the contract, including start dates and end dates. You'll want to compile the interest rates. This can be implicit in the lease agreement, or you may have to have an incremental borrowing rate. This can be obtained from the lessor, can be obtained from your BOCES, but if rates aren't available, you can also reach out to fiscal advisors, maybe get a rate for what you would be charged if you were financing a similar asset. Also want to know who controls the asset, who has the right to determine the nature and manner of use, who has the title to the asset, and does ownership transfer at the end of the lease. All of these characteristics are going to help you assist you in your decision-making process and determine how we're going to record this lease, as we'll talk about later on in this presentation. You also want to work closely with your auditor. Review the lease inventory with them, make sure that you're on the same page and that things are going to be recorded properly. Lease materiality. You want to establish internal thresholds similar to that of like capital asset thresholds. However, it is important to note that individually immaterial lease assets may require a material lease liability for leases. Referring to the implementation guide, question number 4.23, lease liabilities that are significant individually or in the aggregate should be recognized. So this does indicate that even though it may be immaterial on an individual item basis, you still have to consider in the aggregate if it's going to be material or not. And finally, you want to work with your BOCES. Again, if you have a lot of lease transactions with your BOCES, confirm the lease inventory with them to make sure you're on the same page of who owns assets, and identify one-time payments for items, deferred payment plans, or multi-year purchase agreements, which we'll discuss a little bit later. You're also going to want to determine how to calculate the lease liability and prepare information for disclosures. Review your software options that are available to assist in calculating these lease liabilities. Compile necessary information for disclosures, such as schedule of future lease payments, interest rates, methodologies used, etc. There are a lot of software options that are available to assist in these lease calculations. You can use something as simple as Excel. You can also use some software out there, such as Lease Crunch or Lease Query. You also want to consider reaching out to your auditors. They may have a software available that they'll be able to assist you in these lease calculations, which might make the process easier for you as well. And here at Bowers, we use Lease Crunch to assist our clients, and we have the ability to use this for all of our clients as well. So anyone needs help with calculating their leases, we do have that available.
So what is a lease? Sounds like a simple question, right? So under GASB 87, a lease is a contract that conveys control of the right to use another entity's non-financial asset as specified in the contract for a period of time in an exchange transaction. Convey control means the right to obtain the present service capacity from use of the underlying asset as specified in the contract, and the right to determine the nature and manners of use of the underlying asset as specified in the contract. A non-financial asset is an asset where its value is derived from its physical characteristics, such as land, buildings, motor vehicles, or equipment. So a lot of the typical leases we see are classroom space, phone systems, copiers, desktops, laptops, BOCES transactions, which include deferred payment plans, installment purchase contracts, and cash payments for items such as switches, desktop computers, or other devices. So a typical deferred payment plan will include monthly billing for anywhere from 36 to 60 months. Financing is typically through the vendor, where BOCES pays the vendor and bills the district. And BOCES owns the equipment at the end of the deferred payment plan. Multi-year purchase agreements. BOCES financing typically through a bank loan with a term of 3 to 5 years. The equipment is owned by BOCES. So accounting for deferred payment plans and multi-year purchase agreements is consistent with that of a typical lease transaction. And you would need to record the right to use lease asset and corresponding lease liability. So cash payments for items through BOCES. So this is a service agreement where the district pays for the right to use items until the end of the useful life or replacement period. The equipment is owned by BOCES, and BOCES is responsible for the equipment when the district no longer requires them. The accounting for this is a little different. You would record a right to use lease asset only as the asset has been paid for already, and no corresponding lease liability would need to be recorded.
Okay, so now we have the definition of a lease. So now we're going to move on to the accounting treatment for leases, and how is this going to impact our financial statements as well? So a couple different scenarios here. First of all, short-term leases. Lease agreement specifies a non-cancelable term after considering possible extensions for 12 months or less. In this case, that's a short-term lease. Lease accounting requires entries to post outflow of resources during each period. rent expense in the government-wide, and an expenditure in the modified accrual financial statements. Contracts with transfers of ownership. This lease agreement transfers ownership of the asset to the lessee by the end of the contract and cannot contain termination options. However, GASB does allow contracts that contain cancellation options or cancellation clauses to be treated as a sale as long as they're reasonably certain that the clause will not be exercised. Now, these, again, is not a lease, and this will be accounted for as a finance purchase or installment purchase debt. All other leases that are not short-term leases or do not have transfer of ownership or fit in these first two categories that are on the slide will be treated in the new single model approach. So you have separate accounting whether you're a lessee or a lessor. We'll go through both of those scenarios in the next few slides here. So lease accounting for the lessee. At the commencement of the lease, you'll recognize a lease liability measured at the present value of fixed minimum lease payments. You also recognize a ready-to-use lease asset equal to the liability, plus additional payments for initial direct costs. In most cases, you will have a right-to-use lease asset that is equal to the lease liability. Throughout the lease term, the right-to-use asset will be amortized in a systematic manner over the short of the lease term or useful life of the new asset. And the lease liability treatment is consistent with financing. You'll recognize interest expense over the time based on the current balance of the lease and the implicit interest rate or the incremental borrowing rate. So how is it going to impact our financial statements? For a lessee, in the governmental funds, expenditures and other financing sources or revenue should be reported in the period that the lease is recognized. This would be a debit to capital outlay, credit to other financing sources, or for the lease proceeds. You're also going to report the lease payment consistent with governmental fund accounting principles for all periods and consistent with debt service payments on long-term debt. This is going to be accomplished by debiting principal expense, debiting interest expense, and crediting cash. Now, on your entity-wide statements, in the initial year, you're going to record the right-to-use asset as a debit and a credit to the lease liability. The lease liability will have both a current and a non-current portion. In subsequent years, you'll decrease the lease liability and record interest expense and credit cash. You will also debit the amortization expense and credit the right to use accumulated amortization. On your ST3s, you're going to be reporting on the lessee side, you're reporting on the schedule of non-current governmental assets. You have a debit to intangible lease asset and a credit to your total non-current governmental assets. And then on the schedule of non-current governmental liabilities, you'll have a debit to total non-current governmental liabilities and a credit to your lease liability. Now, on the other side of the transactions, lease accounting for the lessor. At the commencement of the lease, you'll recognize a lease receivable measured at the present value of the lease payments. You'll also recognize a deferred inflow of resources equal to the receivable, plus any payments received at or before the commencement of the lease and that are related to future periods. And then throughout the lease term, you'll recognize interest revenue and lease revenue in a systematic manner over the term of the lease. So now on the lessor side, how is this going to affect our financial statements? This will have an impact on our governmental funds, and we'll record a lease receivable at the beginning of the lease, debit lease receivable, credit deferred inflow of resources. In subsequent years, as you make lease payments, you will debit cash, credit interest income, credit lease receivable, debit deferred inflow of resources, and credit your lease revenue.
So now we have a specific lease example that we'll go over and kind of walk through some of the journal entries that be recorded in the initial year and in subsequent years. So we'll go over some of the details here. So We have a vehicle lease for a non-cancelable term of 3 years on July 1, 2021. The lease calls for annual lease payments of $10,000 on June 30th of each year, the implicit interest rate of 5%. The lease conveys no ownership at the end of the lease term, contains no purchase option, and requires no guarantee of residual value. Because of the non-cancelable lease term extends past 1 year and does not transfer ownership, GASB 87 requires the lessee to recognize a lease liability, an intangible right of use asset. So in the table here, we have the amortization schedule for the lease. So you see on the far right, the asset and liability are amortized at the same rate. And the asset and liability is the amount of total principal payments there. So as we get into the journal entries for the lessee, so in your governmental funds in the initial year of the lease, so this will be recorded on July 1, 2021. In your governmental funds, of course, you'll debit to a capital outlay and credit to your financing, other financing sources for that $27,174. And then in your fixed asset and long-term debts, you'll record entries as well. And the fixed assets will be a debit to the intangible lease asset and a credit to your total non-current government assets. And then in your non-current government liabilities, you would debit your total non-current government liabilities and credit a lease liability. So in the initial year of lease, so this would be your first payment on that lease. In the governmental funds, you record a debit to both principal and interest expense, and then of course credit to cash. And then in your fixed asset and long-term debt funds, you would record a debit to the lease liabilities for the amount of that principal expense and a credit to your non-current government liabilities. And then in your non-current government assets, you would kind of do the same there to amortize the lease asset. You would debit your non-current assets and credit the accumulated amortization for leases. So then this would be your journal entries for the second year of your lease payments. So these are the same entries as you've made on your first year of lease payments, but of course, following your amortization schedule for the second year of the lease. So now for the entries that the lessor would make in your governmental funds in the initial year of the lease, you debit your lease receivable and credit a deferred inflow of resources. Once you've received the first payment, you debit cash, credit interest and earnings, and also credit the lease receivable. Of course, crediting the lease receivable for the amount of principal received. And then record also a debit to the deferred inflow of resources and credit to lease revenue. And again, these same entries here would be made in the second year and all subsequent years following along with the amortization schedule previously presented.
All right, thanks, Andrew. So that kind of concludes our presentation for the GASB 87 section. We reviewed GASB 87, we went through what is a lease, how do we prepare for the implementation, what do we need to be doing now to prepare for our year-end audit, how does this affect the financial statements so that we know what entries we need to make. And we also saw an example that Andrew just walked us through that kind of breaks down what the entries need to be made on the fund level. So the next topic I have here is GASB 96, subscription-based information technology arrangements. And some of you may be asking, why is this important? I don't know if I've seen this before. I'll kind of walk through that. It does tie very closely to GASB 87. As noted here, very similar to GASB 87, except for IT arrangements. So this is effective for beginning after June 15, 2022, and is applied retroactively. So this will be your June 30th year end. It would be for the year June 30th, 2023 that you would have to implement this. However, early implementation is allowed and often encouraged because GASB 87 and GASB 96 are very closely related as far as the accounting goes. So an SBITA is a contract that conveys control of the right to use another party's IT software, alone or in combination with a tangible capital asset, as specified in the contract for a period of time in exchange or exchange-like transaction. So this statement does not apply to certain transactions. It does not apply to contracts that convey control of the right to use another party's combination of IT software and tangible capital assets that meet the definition of a lease, which is accounted for in GASB 87 as we just described. So think about this as software on laptops. Laptops are going to qualify for GASB 87, so that will not be qualified under GASB 96. Also, does not apply to governments that provide the right to use their IT software and associated tangible capital assets to other entities. It also doesn't apply to contracts that meet the definition of a public-private partnership. Again, that's accounted for in a separate GASB. And finally, licensing arrangements that provide a perpetual license to governments to use vendors' computer software, which is subject to Statement 51. So accounting for these, it's going to depend on what the underlying asset is. So tangible capital asset alone, such as a computer, you're going to follow GASB 87. IT software alone, let's just say you don't have a lease agreement for the asset, you just have the IT software, it could qualify for GASB 96. If you have a combination of both, you're going to need to determine the significance of the software. And if it's insignificant, then you're going to be using GASB 87. Otherwise, if it is significant, you're going to break up the two, and the software would be under GASB 96. Other key points to consider while you're making this determination, are you controlling the software needed to run the operation versus a subscription to the content? And finally, do you need software installed in your system in order to utilize the system? This is just a brief introduction of GASB 96. Definitely keep this in mind as you're going through your lease implementation, reviewing your lease inventory, identify any of those software arrangements that you have, bring those up to your auditors now so that you can make sure you have the best plan for implementation, and that it's important not to miss these right now, because if you miss these subscriptions and next year you catch them, you don't want to have mistakes that weren't caught timely. So financial software, you're going to need to look at the contracts, consider, do you have a perpetual license? Do you pay up front fee and then just pay for the updates as they come forward? So let's say for Envision, for instance, if you're for your accounting software, you just paid an upfront fee and every year you're just paying for those updates. That may not be an SBITA. Also, is it a year-to-year renewal? With renewal options, you need to determine what the subscription term is. Also going to need to obtain a master agreement and understand the relationship that you may have with BOCES or other entities. So that concludes our presentation today on the new lease standard, GASB 87, as well as just a brief introduction to GASB 96. I know there's a lot of information out there about GASB. You go on the OSC website, there's a lot of tools, webinars to help you with the implementation process. And then obviously as well, we're all available here at Bowers to help. You'll see Andrew and myself, our contact information, our emails here on the left side. You can also go to our website and contact any member of our government accounting team. So thank you, everyone. Good luck to everyone on their upcoming audit season. And as always, we at Bowers are happy to help if you have any questions.